Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ed Carson here. Actually, it's not. It's Ken Shreve here. Sorry about that, Ken. Wow. It's Coram and Ken Shreve here with a breakdown of the action in today's session. I think it's the first time I've ever done that. Anyway, I guess the market has me all frazzled because we did end up closing, I feel like, at or near session lows, Ken, the market digesting that big warning from Target. Also, Micron warned as well. So there was a lot to digest in today's session.
Yeah, I mean, just definitely negative sentiment, like you mentioned. Micron has made it a habit of warning lately. In early August, they warned on revenue, and then in September, they talked about cutting way back on, capex spending. So, and then you had Target come out. We had great earnings from Walmart yesterday, and then Target comes out and talks about a weak consumer and possibly a soft holiday season. That stock got crushed, but anyway, we did find three stocks to go over, and the first is Jabil, ticker JBL, a contract manufacturer. Also, Archer Daniels Midland holding up well in this market where growth stocks are coming under selling pressure. ADM is the ticker there, and finally Grainger, GWW is the ticker there, also looking good.
Okay, three stocks we'll check in on, but first let's take a look at those major indexes. The Nasdaq today down about 1.5% by sessions close, so slightly off lows, but still down pretty solidly. Small caps got hit even harder though, with the Russell 2000 down 1.8% today. The S&P closing down 0.8%, and the Dow, which had been the lone index in positive territory, it too got dragged down by the close, closing in negative territory, down 0.1%. I mean, at this point, it's not surprising at all to see a down day, a pause, a digestion of the strong gains. But what we don't want is to see us give back all of those gains that we got last week.
Yeah, the one good thing about the market today is it does look like volume came in quite a bit lower than what we saw on Tuesday. So it looks like we avoided a distribution day, because certainly the percentage declines were steep enough where if we did get higher volume, it would have been another distribution day. So you can see the Nasdaq holding above a lot of support levels here. So, but you're right. I mean, we're up pretty sharply 3 out of 4 sessions. The fact that the Nasdaq is holding support here is a good sign, and especially after that bullish move last Thursday when we got that cool reading on consumer prices. So not much technical damage that I can see to the Nasdaq chart here. It was a little disconcerting to see a lot of selling in some top-rated growth stocks today, but a lot of these have been running higher too and are just starting to consolidate.
Mm-hmm. Okay, well, let's check in on the other major indexes. First, we've got the S&P 500 here, bumping its head up against that 4,000 level and turning tail here a little bit today. So, Ken, that's definitely a short-term hurdle that we are keeping a close watch on for the S&P.
Yeah, but again, just a strong rally over the past several days. So just a little sideways movement underneath the 4,000 level here, and let the index digest some of its recent gains, and that could pave the way for a breakout try over the 4,000 level before the end of the year. We'll I know the bulls are keeping that hope alive, and but again, just looking at the S&P 500 chart here, not much technical damage at all. But holding above recent lows and well above short-term support levels.
Yeah, sideways action would definitely be constructive here. We will take it. Also, the Dow, not concerning at these levels, but Ken, I will say, what is at least a yellow flag here is the Russell 2000 IWM hitting some resistance at this 200-day line. It could, of course, get right back above it, but it does appear to at least be showing some signs of struggle at that longer-term level.
Yeah, definitely. You had that nice heavy volume gain for the Russell last week when it went right up to its 200-day moving average, and it did try to get above that line, but you see some early strength followed up by some weakness, and it eventually gives up the support level today. So this is probably ready to consolidate as well. And it's fine for markets to consolidate. It's fine for indexes to consolidate. Again, you just want to pay attention to the volume and how they're consolidating. The percentage declines today, especially on the Nasdaq, down more than 1%. But it looks like we got lower volume than the prior session. So even though the session might have felt like institutional selling, definitely lower volume softened the blow a little bit.
So, it's only Wednesday. We've still got 2 sessions left. But if we close the week like this, Ken, does that mean we could be headed back to, or maybe test that 10-week line here for the Russell? Or could we just see some chop and slop sideways action from here?
Probably the latter, but wouldn't be surprised at all just looking at the price action in the Russell today and the S&P 500 that we just looked at. We may be at a point now where we're going to just move sideways for a little period of time, and we just don't want to see violent percentage declines in the indexes. We want to see leading growth stocks. If some are coming back to buy points, are they coming back to these buy points in light volume? And we're going to look at a couple stocks like that today. So yeah, we'll see. We're still in a confirmed uptrend. Today's market action is not going to do anything to get us more bearish on the market. Just expecting a little consolidation here, and we'll hope that it's healthy consolidation in coming days.
Okay. And next, let's take a look at the 10-year yield and the dollar 0TNX shaping up with a second down week in a row here so far through Wednesday. So continuing to see further erosion, which is good for a market rally, although we saw the move in the same equities and the 10-year yield move in the same direction today versus in opposite directions
Yeah, so the market in the past has shown that it likes falling bond yields. It just makes the market feel like, well, maybe the Fed is not going to be super aggressive with rate hikes, going forward in December and then in February. But you had a big drop in the yield again today, and that you did have stronger than expected retail sales for October that came out before the open. But normally a falling 10-year yield is going to be good for the market, but bond yields fell and the market fell today. I think just that warning from Target and Micron kind of dictated the action.
That's absolutely right. We can also quickly look at the dollar. Proxy here is UUP. Still, the trend is lower, edging down today, but also something that the market has liked in this rally. That may be different than different conditions, perhaps, and what we saw in the rally over the summer. What do you think?
Well, I think the market right now, and then the dollar has weakened in these expectations that we could only get 50 basis points at the December meeting, and at last check, I know at one point yesterday the market was leaning towards only a quarter point hike in February. But I think there was a St. Louis Fed president that came on today was talking kind of hawkish, but that did not help the 10-year yield or the dollar rally. So as long as we can keep the dollar in a downtrend here, that should be good for stocks. So the market's not going to like a meaningful increase in the dollar from this point.
And among stocks to watch, let's check in on ticker JBL in the contract manufacturing group, which the subject of a recent IBD story into what's going on in this group. It's now number 6 out of 197, so definitely seeing an increase in the group's strength as of late, and a lot of volume coming into the stock on recent updates, Ken?
Yeah, I think this was the industry snapshot in the latest IBD Weekly. But yeah, nice breakout here. But I like the way that Jabil is kind of retesting the buy area. Remember, today was a very rocky session for a lot of tech stocks, but Jabil has a very strong industry group working in its favor, ranking 6th out of 197 groups that we rank based on 6-month price performance. But after multiple up days in a row, now granted, the stock did close off highs. Every one of those up days over the past 4 sessions, the stock kind of backed off highs. But I like the way it consolidated today. It closed off lows, traded in a real tight range, and to me, this stock still looks actionable from that recent pivot of 65.88. So I think Jabil looks good, and leadership is very broad in this industry group. So that's a good sign too.
Right, and the relative strength line is looking pretty strong here. And Ken, it seems like with the sideways action that we've seen for the stock since its prior highs at the beginning of the year, I feel like these long bases can be viewed in one of two ways. Well, maybe if it's gone sideways for 11 months, it hasn't been really outperforming like maybe some other areas have, namely energy and some of the other areas. But at the same time, when you do see these big long bases and stocks breaking out of those, I mean, that long rest for a stock can be a good thing.
Yeah, well, look at the last time Jabil broke out of this really long base, pulled back all the way down to like the 16 level, and it was just this really steep, long base that it went through, and it went on a really nice run after that breakout. So here we are again after a lengthy period of consolidation. This one still could be in the early stages of a move. I think it's definitely worth a shot just because of the strength of the industry group. Yeah, tech stocks are still challenged, but with Jabil, you're not looking at a stock that's selling at 40, 50, 60 times trailing earnings. It tends to be sell at a relatively cheap valuation, but you do have accelerating revenue growth. Estimates are on the light side, but I think the technicals measure up here, and it's a good looking pullback so far.
Okay, and next on our list, we want to take a look at ADM Archer Daniels Midland, a food stock that has been basing since this spring. Around mid-April here, a couple weeks ago, had a strong move on earnings, up over 5% for the week and some above average volume. And since then, it's been consolidating and trading sideways in a very orderly fashion here, Ken.
Yeah, I think the technical setup here looks really nice too. The daily chart shows you, what a pullback to the 21-day exponential moving average looks like. It's been finding support here, just pulled back and relatively light volume in the buy zone here. And again, if you're kind of not all that keen on some of these fast-growing technology stocks, there are areas of the market where you're seeing money flow, and I think ADM is one of those stocks, and doesn't look stretched here after again a low volume pullback to the 21-day line.
All right, and last but not least, let's take a look at GWW. Grainger, because it too is pulling back, not yet quite to its 21-day line, but I think this is a great example of why cup-based breakouts can be pretty tricky, especially if you see a pretty quick advance on that right side of the base, which is what we saw here for GWW. So waiting to see if it can hold those gains, if it needs to pause here, form some sort of high handle type action. And it looks like that's what we're getting now, Ken.
Yeah, this was a tough one because it really started to move when it was below 550, and then it reported earnings, and then it surged above that 550 level, and then it broke out over the left side high here. So you did get a pullback. It was a pretty harrowing pullback to start. You did have a higher volume, so this isn't exactly a low volume pullback. However, the stock on a decidedly down session for the market today, bucked the trend. I think it was a three session losing streak. I can't tell, 3 or 4 sessions down in a row, but it was up today, and it's just still kind of toying with that last buy area. So again, not a sexy industry group here. Grainger is a distributor of maintenance and repair products, and just another good-looking chart here in kind of a suspect market.
And a couple of quick stock updates for you after the close. We got earnings from Cisco, CSCO. It's up almost 5% on its earnings results. Guidance is going to be coming on the call, so we don't quite have that yet. And then in sympathy, we have ANET as well. It looked like it was up about 2% at one point. Now maybe not much trading action, but it could be telling of what we see tomorrow. If we do see ANET moving in sympathy with Cisco, ANET has been the kind of quality stock that's more squarely in our sights, but always helps to have group peers provide potential boosts to stocks on our watch lists.
Yeah, absolutely. So ANET is a leaderboard stock. So we'll see if those numbers from Cisco can bring some money into the networking space. Also, NVIDIA is a good one to look at. They reported earnings after the close today. That's been a stock that's struggling and doesn't look like it's moving a whole lot. Haven't had a chance to look at the earnings report yet, but
picking up a little bit here.
Picking up a little bit, yep.
So. Yeah, up about 2.5%, 3% or so. And as we were talking about on IBD Live, maybe NVIDIA isn't the way to go if it has a strong positive reaction to earnings, but how is it going to impact some of the other leading stocks in the chip sector? Maybe that could help provide a boost to the group. So we will be keeping a close watch on that in tomorrow's session. Well, thank you, Ken, and thanks everyone for watching. We will be back with more tomorrow morning on IBD Live, so please tune in, investors.com/IBD Live for all the details, starting 10 minutes before the opening bell and running through the first 90 minutes of trade, where we are talking about actionable trade ideas, portfolio management strategies, our take on overall market conditions, and so much more. So we'll see you in the morning, and we'll see you right back here tomorrow at the close.